Hey, what's going on, everybody? It's Wednesday, and that means it's time for the beat. And well, what a crazy day we had today with Powell speaking. We've got all that to unpack today. So let's get right on into it. I'm Kang.
I'm Maria.
And I'm Hells.
Hey, so yo, we all had Powell come out. He laid all this stuff out. Like, yo, what were y'all thinking about it?
Yo.
I mean, Hells, I know you got something to say. Come on. When he was talking
Yeah,
today,
look,
I
it's
thought
like,
about
yo,
you. I
you
don't
know
think of
what?
you often, but I thought about you when Powell was talking.
So, okay, let me just go through a couple of quick excerpts from his speech, okay, and then maybe I'll say something. When asked the question, what would one more hike at the end of the year do to the economy or and inflation? His answer: we don't really know. Next, when asked about demand destruction and people losing their jobs, kind of sort of said, well, that's not necessarily a bad thing. A soft landing, it might be achievable. He always thought that it was, but there could be things that are out of his control as far as so definitely not his fault if we don't have a soft landing. What standard are you using to determine the right level for rates? I don't know. I'll know it when I see it. Hard to say. And my favorite, my absolute favorite, no one will ever look and say, we had a plan. Nobody will ever look and say, we had a plan. This is a dude responsible for monetary policy in this country. Okay? He is responsible, and he's over there fully admitting, I got no plan. Now, that's okay to not have a plan if inflation was actually transitory, which it wasn't. That'd be okay not to have a plan if on the other side, we can hold steady with rates being low. We don't need a raise as him waiting as long as it took. It's okay to not have a plan when you get it right. When you get it wrong over and over and over again, and you stand in front of the American people and you say, you know what, more pain is coming your way, and I don't give a shit, because that's what he said today. That is 100% what he said today. So yeah, those are my thoughts. I look. I think the dude is a criminal. I think that he basically hates the majority of Americans, and I think his policy speaks for himself. That's what I think. Those are his words.
Uh,
It's like, look, Kang, seriously.
Mario, how are you
If
feeling?
you
How
went,
you
went to the
feeling, Mario?
boss and you said, yo, man, I just trade without a plan, yo, it just is what it is. Do you get to keep your job? I don't think you do. I don't think anybody does.
Mario,
You know,
how
I
yeah, Mario, how you feeling?
so I get it. I get what House is saying, and it would be nice to have a little bit more clarification. But I think there's always two sides to every story, and I think that there's also probably a lot of stuff that he really can't say, or maybe he just doesn't know. So I think it's I think we have to consider both. Like what I want and what I'm getting are two separate things, right? So you got to try to find something in the middle. I would love to know more, but I also understand that there may be some things that we just can't know yet.
Hmm. I agree with you, Mario. I agree with you 100%. And I think too, he was talking about today. One of the things stuck out to me. Look, nobody's saying. I think I've maintained this throughout this entire. We've had shows on this before. For me personally, I don't think anybody says that they. It's not a fun thing to go out here and say, "Hey, we want people to lose their jobs." We know, like they've said this press conference after press conference. That we do expect a softening in the labor market, but at the same time, I think one thing that he said today stuck out to me. He was like, people on fixed income, when they're paying, 5-6% inflation, they feel that right away. And so, our job, now they have the dual mandate, it's full employment or maximum employment and stable prices. And so they have, by historical standards right now, full employment, but they don't have stable prices. And so there's still some ways to go. And, look, I'm not making excuses for them, because I do think that they did say some interesting things today. But at least for me, I don't know what's going to happen in several months. And none of us do. You know, uh, we trade every day, so we know that there's uncertainty. And when you're trying to steer something as large as the U.S. economy, there's going to be a lot of uncertainty there as well. So, I mean, really, what as much as we all want more definitive stuff, I mean, really, you are almost pissing in the wind. So what do we really expect him to say?
So I'll take every point that you gave, King. But there's a difference with if what you've been doing and the work that you've done over the last few years is showing that you're competent in what you're doing, you get the benefit of the doubt. But you've been wrong about every policy decision that you put out there over the last several years, and now you're asking for the benefit of the doubt. It's like the disconnect is not anything other than we just want accountability. How about that? How about that? There's actual accountability within the system to be like, dude, you helped create this mess. And now instead of owning the mess that you created, you're sitting there taking it out on the most vulnerable. It's like it's so disingenuous. And maybe I should be more dull to what it is. Maybe I shouldn't care. Maybe I should look at my life and be like, you know what? My life's okay. It'll be fine. Maybe I shouldn't care about other people. And then it's easier for me to digest. But this, in and of itself, is an absolute disaster. And he's taking no responsibility for it along the way.
Well, but he can't, well, first and foremost, I say Mario and I almost said about the same thing. So you'd be also talking about both the points there,
Mm-hmm.
but you're not going to make these kind of decisions and not somebody not feel some pain. And so, zero interest rate policies were there for a long time. I think they held in long in the tooth in keeping it at zero for a long time. And at some time, you got to pay the bill. And two, again, this is just one half of the equation. The people who are spending money in Congress are not helping. So he's also got the FOMC has also got to deal with that too. So they only have a couple of instruments and they're very limited in terms of what they can do. So I mean, what do we expect them to do? And again, like I said, you've
Stop
got a
being
bunch of
wrong.
people out there who are on fixed income, and if they're consistently paying high prices, it's hurting them too. So yeah, I mean, somebody's going to feel some pain, but you've got to do it. You cannot let inflation get entrenched.
And I think that there's a happy medium, and I think we're kind of saying the same thing to Maria's point, and even to your point, King. It's like I genuinely understand what you're saying, but if I can say that I understand your point and the point that you're trying to make, I think there should be more emphasis put on the fact that what they've done and the policy decisions that they have inflicted over the last several years have not only been wrong, but they've made the situation worse. And now we can say it's like, well, what you have to fix it somehow, but at the same time it's like, is he the person to be fixing it when he was in charge while it became a mess? That's the problem that I have. In no other industry are you allowed to have a high level of error and incompetence with literally trillions of dollars being ripped off on a monthly basis by his decisions and still keep your job. And the answer is no. But somehow
Well,
he's insulated, somehow they're insulated, is
Well,
what it
thank
is.
goodness that Powell's not the only one that's making monetary policy. This is the entire FOMC board and its voting members.
Hmm.
So it's not just Powell. This is a group of people who are voting on these decisions. But again, we can't just look at Powell, right? We can't just look at the FOMC. You have to look
Well,
at the other side of the
yeah,
equation, which is fiscal policy, and that is Congress. So you have to look at the other side of it as well. You can't just look at FOMC.
yeah, okay. So we've agreed to disagree and agreed on a lot of things. I think that's positive. That's a good thing.
There we go, folks. So let's get right on into it. So we covered the Fed. That brings up
And
Shag.
actually, Kane, before we do that, let me go ahead and get FedEx's earnings out. We're going to
Okay,
do it
cool.
right at the beginning, but let me go ahead and get that out because I know there's been a lot of people waiting for that. So FedEx did report. It's the only one that we have to cover today. FedEx reported Q1 EPS $4.55 on a consensus of 373. They reported Q1 revenue 21.7 billion on a consensus of 21.81. That is a miss on revenue. They narrow full year 24 EPS view to 17 to 1850. Consensus was 1750. And they see full year 24 revenue flat versus prior view of flat to low single digits. Consensus 89.89 billion. So that is what we have for FedEx, and
They're up nicely.
they're actually up. Okay, great. I guess that's what we expect these days, right? So FedEx is up. I know we'll be waiting for the conference call. Go ahead, Kay. Thank you.
Hey, no worries, no worries. My bad. All right, let's try this again. Now it's Shag Mary Kill. Looks like
Alrighty.
Mario, you got it. So what you got for us today?
I've got SE. SE is my choice. So it is going to be a cautious shag for me. Last week there was some decent buying into the October 13th $40 calls. Um, and if you look at that daily chart, you'll see that they are buying through an area of consolidation, which I love. OI looks okay for now. You'll see that some of that position has been closed out, but the majority remains open. A large portion, like more than 80% of it, is open. So we do have a couple of weeks for this one to show us which way it actually wants to go. I'm holding it for now, and it's a cautious shag for me.
Look, it's like that.
Yeah, cautious shag for me too. That's all.
Yeah, I think in general right now it's very difficult for me to look at anything other than short-term intraday pops. Like we've seen a couple of nice things come through. Still the same here. It's like I just can't until I see some more come in with it with a good conscience try to get long anything at all. So maybe kill. I don't know what the hell to call it. Uh, All right, so Home Depot, we finally got our move. We finally got the move. Home Depot, this trade is now green and looking like it can be a okay. With the pressure that Powell and the Fed are putting on the American people as far as being able to dig deep and buy stuff, it doesn't look all that super moving forward. Now, I did. There should be a chart somewhere for Home Depot. It did pull down into an area, but I'm still targeting this 300 flat level before it actually bounces. It's really, really difficult in a lot of ways. You can see that dark pool there at 1.6 million that came in Home Depot a while ago. So that's where I would look for a defined bounce. Look, we wait for a long time we waited for a long time for the Fed to offer direction. They offered direction, and it would appear, based on what they're saying, that Christmas is going to be difficult for a lot of people. I don't expect tickers like Home Depot to necessarily hold up. Still a kill, yeah.
Um, I like it. I'm gonna roll with you.
Yeah, kill it. Yeah,
Kill
AC,
it. Yeah.
especially going into the fall. I'd be a kill it. All right, me Tesla. Yeah, I thought a while about this one when I was submitting this, but I do like this setup here on the daily. We did break out of a rising wedge right there to the downside. Notice where we bounced. We bounced right on a trend that actually goes back to mid-August at the lows. So was watching this today, and we actually finished very close to the trend. When I submitted this, we were up, but we actually came right back down here to the trend. I got it at 263. So this is going to be a fade for me. Definitely kill Tesla here. I think if we get below this 263, it could be on like Donkey Kong. So do like the rising wedge that was bearish. We broke out of that, could not retake that prior area of support slash that was or now it's turned into resistance up there 275. But again, 263 right through here. We did kind of close south of that today, but I just want to see if we're going to get some volume below 263. But this would be a kill for me if we can get volume here below 263.
Yeah. Look, if we have market weakness, Tesla is gonna feel it. I can say that of all the flow that I've seen over the past couple of weeks, Tesla flow to the upside is the best. But today is one of those events that kind of reshuffles the deck. Um, Market weakness, Tesla can only hold on for so long, so it's hard to argue with that. Don't like it, but sure.
It's gonna be a kill for me too. I'm with you, King. I'm with both of you. I agree.
Woo! Woo! All right, folks. So let's hear what the folks are saying out there. We do have a viewer question that came in. So, Hom Tanks, shout out. See you in the room all the time. When taking into consideration of major indices and their derivatives such as SPY, ES, and SPX, have you sensed which time frame fits better to which ticker? I would say for me, no. Just because like I'll trade it. It don't matter if it's 1 minute or hourly or daily. I hope I'm answering your question, but to me, it doesn't matter. I'll trade it on every single time frame. All I care about is if there's a good setup.
Yeah, it's like for me, you can't expect if you're trading an hourly chart, you can't expect it to get your move, within 3 minutes, right? If you're trading a daily, you can't even really expect to get your move within several days to a week. You really can't expect that necessarily. So it depends on what you're trying to accomplish. Intraday, I really prefer the 3 minute. I like the way I have my EMAs and MAs set up against the 3 minute as far as scalping intraday. 3 minute for me works really, really well. Trying to identify setups in general in order to trade the smaller time frames, I would look at 15 minute is a good little time frame to look at, looking for a setup to be able to take advantage of. But I think it depends on. I think just like with anything, if you're going to go out and do a task, do a job, you have to make sure that you have the right tool. It's like it's one thing if you're going to cut down one tree, you can have a chainsaw. If you're trying to cut down an entire field, you're going to need multiple chainsaws and a lot of heavy equipment. So it really depends on what you're trying to accomplish within the given task.
I agree. I agree with both Kang and Hells. Um, the question isn't. It's not a black and white. It's always going to be this time frame. For me, it's very dependent on what I'm doing. Am I swinging? Am I scalping? Do I? Is it a messy looking 1 minute? Is it a clean looking 1 minute? Is the rest of the market doing something opposite? There's so many different things that go into making that decision. But what I will tell you is that I intraday, just as a rule, I tend to trade on a 1 minute chart. I will always have a 1 minute chart pulled up. That does not mean that there aren't times where on that next little box, I may have a 3 minute, a 5 minute, or 15, or sometimes even longer. If I need to see a longer area of support or resistance, I may be looking at, a 20-day chart. I might be looking at a daily chart. So it's not always going to be, it's not a black and white answer where it's always going to be one or the other. Or it's not, it doesn't, it's not anything where it's like SPY looks best on a 1 minute, ES looks best on a 3 minute, and SPX looks best on a 20 minute or 15 minute or whatever. It's not that. For me, it's mostly what is the reason I'm taking that trade? Is it, or what is my intention for the trade? Is it a swing? Is it a scalp? And along with a whole bunch of other factors that I already just said.
Mario, I love all the answers. I think we have a couple more minutes. I know we're not doing where's the money flowing, but there's one thing that I've seen, and I forgot to mention it. But I think we need to take a close look at casinos and travel leisure stocks as far as how the flow is coming in. There has been defined weakness over the last several days, and I meant to put a trade on today. As far as getting short either Caesar or MGM, there is defined weakness within the flow in that sector specifically. We saw Southwest Air downgrade itself basically a couple of days ago. So I think specifically in that discretionary, if the free money thing, I think we can look for weakness in that and to follow through on flow. So that would be something that I would put out to anybody that's kind of watching flow moving forward. If we get more weakness into MGM, Caesars, when those types of tickers, there's already built-in flow to the downside there. So be very, very opportunistic if you can.
All right, folks. Well, that brings us to the end of the show. I don't know about y'all. That time flew by fast. But hey, that'll wrap up another show today, folks. So hopefully y'all join us again next week. I know I'll be out next week on vacation, but y'all have a good one. And if please like and subscribe on our YouTube page to know when we go live. It'll be again 10 minutes after the bell next Wednesday. So until then, folks, stay green. Y'all have a good week and see you then. Peace.
Bye, guys.
Bye.